Hey guys, how you going? It's Young Ewan here. Hopefully you can see me. I just thought I'd do a bit of a post on update of the marketplace, where I think things are going, or at least just some comments on it. Who can read the future, right? It's been just a phenomenal year of double-digit growth, and we haven't had this kind of growth for a long time. So I like to look at the charts. Like to look at history and see what has happened in the past, especially the last 20 years, if not more, and see what's going to happen potentially, because who knows, but all you can look at is indicators. So last week I posted about the APRA starting to put their foot down there. Essentially what they're doing is increasing the thresholds of calculations for a finance broker or a bank of affordability of 0.5%. So essentially from 2 weeks ago to this week, you could say the change is if you're going to go borrow money, they're going to stress test it a little bit harder with an extra 0.5% there. So one of the things you really want to take a note of is, when did APRA put their foot down previously? It was December 2014. December 2014. Why that's important is then you can look at the city market, you can look at the Melbourne market in 2017, which is, call it 3 years later, they went into massive price changes. So in Sydney itself and Melbourne, prices reduced by, call it 8, 10, 15%, right? So that's a 2.5 to 3 year, 3 years after APRA put their foot down. And I don't think it's a bad thing. I think APRA, when they came in, my first reaction, and my reaction these days, is that it's a slow handbrake. It's a soft landing, you could say, soft landing, because what you don't want to happen is, we don't want the GFC to ever happen again. It just happened overnight. Things changed overnight, and a lot of businesses went bust. I lost a lot of money as well, and I nearly went broke myself, but luckily we bought well and were able to come out the other end. But my point is that, when APRA comes in, it's not a bad thing to slow things down and get people thinking a little bit more logically. Having said that, my question on this particular post is it a good time to buy? Is it a good time to sell? Is it a good time to hold? So I think probably easiest for me in terms of buy or sell, I think I'll start with the easiest one, is sell. If you're planning to sell, now is a really great time to sell. I haven't seen it easier. I've sold down a handful of my blocks of townhouses, a handful of my dog properties that I haven't been able to sell over the years, like in North Queensland, that just had some, I bought them, and over the years they went up, they've gone down, pulled out some equity, and hadn't been able to sell them for what I wanted, but now's a good time to sell. So I've still got one in Rockhampton that should be sold, hopefully, if not this year, early next year. But my point is, if you're looking to sell, now is a great time to sell. Now is a great time to sell. You can take it to auction, you can do a whole bunch of open homes. Shop around and see who's selling a lot of houses there. Some people try to sell it themselves. I'm hearing from agents that one of their challenges is that people are selling houses themselves, so they're missing out on the commissions, because people are just selling it privately. I like to buy privately, and that'll save me a fair bit of commission. And we've just secured a site last week, which we'll cover down the track. But my point is, it is a great time to sell. If you're looking to sell and move somewhere, that could be a challenge, simply because if the house you're living in and you haven't got someone to move to, and you've got to buy somewhere or you've got to rent, that may not be ideal either. So in our instance, my wife doesn't want to sell the house we live in. I always believe everything's available for a price. But my point is, she doesn't really want to sell the house we live in. Maybe down the track, we'll see. So, but the other question is it a good time to buy? Is it a good time to buy? I think it's only a good time to buy if you're planning to resell. It's a good time to buy if you're planning to resell. So buy to sell. And what I mean by that is, if you're buying a rundown place, doing a reno, flipping it, or if you're buying a site and you've got at least 18 to 20% margin on it, and if you get growth on it, great. If you don't, you've still got 18 to 20% margin on it. And I know a lot of people are saying, geez, it's very, very difficult to get those kind of margins on projects. Well, you just got to keep looking. We secured one late last week. It was actually Friday afternoon. another 20,000 square metres to add to our 10,000 square metre supply on the north side, which is cool. That's potentially another 22, 23 blocks to our 11 lots there, so call it 33 blocks of land in the northern side of north side of Brisbane there. Literally they're two sites next door to each other, which is really cool. We've been working on this acquisition for a good 6 months and finally been able to get the seller to sell to us. And in the last 6 months, land in that area has gone up dramatically, and we're quite confident of the prices that we've able to achieve on that new feasibility. So my point is that if you're going to sell, now's a great time to sell cash up. You got to pay some tax, but anytime you're making money, you're paying tax. It's just the way it is. So otherwise, if you sell owner occupy, it's tax free. There's not a problem with that. Maybe move into one of your investment properties. Or go rent for a while and buy back in the next 24, 36 months or when the market settles down. So thirdly, is it a good time to buy and hold? To just hold. So I think that's a really, that's how long is a piece of string question. When I'm looking at the current market, I'm looking at current prices, and I make sure I've got 18 to 20% margins in there just in case the market does come back. It's not a matter of if it'll come back, it's just when it comes back, and you just got to be prepared for that. So one of the things, in finishing up, I do suggest that you definitely keep an eye on is the auction clearance rates. Auction clearance rates, that's really, really important that you keep an eye on that to see where the market's going. As of this week, New South Wales, they are out of lockdown from you can go to the shops and restaurants to a large degree if you're vaccinated, etc., etc. So if you look at the clearance rates in the last 2 to 3 weeks, even they've been very high in New South Wales, and I believe they'll be even higher over the next weeks and months because people are out and about. In Brisbane itself, auction clearance rates from what I saw just over the weekend was over 80%. As if you're familiar, Brisbane auctions clearance rate of 50% is usually pretty warm. 40 is pretty quiet, but 50% plus is really warm. So 80% is very, very high. So my point is that as an indicator of where the market's going or how the market feels, auction clearance rates are a really good way to read it. In New South Wales and Melbourne, anything above 70 is quite strong because of the auction mentality they have there. In Brisbane, anything over 50%, 60% still indicates quite a stable, if not at 80%, it's a very, very strong market. So so my point, just to kind of sum up, is the APRA, keep an eye on that. We've got 2 to 3 years left in this boom market, so just be very, very mindful not to pay too much. Just fear of missing out is definitely a thing that people have, and it causes them to pay too much. Buy or sell is a good time to sell, I think so, and definitely consider that, just to take the money and run or roll it into something else. Then should you buy? Well, I think if you're going to buy to sell, because you really don't want to be paying top dollar, and hopefully the market will go another 10 to 15%, which I don't think it'll do, but who knows, right? Who knows? The projections for the last 21 and 22 from Westpac and NAB and CBA have always all said, but over those 2 years, from January 21 to December 22, they're expecting probably 20-25% over the 2 years, not 20% over just 1 year or even 10 months of 21. So they're expecting probably 3 to 5% growth next year, but who knows? So, and the last one is definitely keep an eye on those auction clearance rates. You don't have to even leave your house. You can do that on a Saturday night or a Sunday morning or even a Monday. Just check, have a look at how many auctions are there, how many people are selling. With New South Wales going out of lockdown, there's going to be a lot more houses on the market, coming up the market, but as fast as they are coming on the market, they're selling like hotcakes. So anyway, hopefully it gives you an idea there. In the next week or so, if I get the chance, I'll do a run through on one of our new acquisitions there. We've just gone to contract, like I said, on 20,000 square meters with a 12-month settlement. So cross fingers, it all goes ahead. We're head down, bum up in the 30-day due diligence period, and just double, triple checking everything, because it is next door to the site that we've recently bought. in and settled in June, we're very, very confident of the state of the nation, yield and things like that, comparable sales to a large degree. So, and it's not as profitable as the first one. However, the first one has turned out to be an exceptional deal, and it's very hard to match that first one when we bought it from a motivated seller and got a massive discount there. So anyway, we'll talk to you soon. Hope you're doing well and enjoying the sunshine before it rains again in Queensland. We'll talk to you later. This is Young Newland's Best Property Strategy signing off. Catch you later.